Hey guys, welcome to episode 2 of showing you the easiest trading strategy you could possibly learn. No indicator, no crappy flashy stuff, just easy, elementary, and sustainable price action. I'm writing here a few takeaways for today's session. Note that we have a valid opening range gap. So the procedure is, wait for the first presented gap, see if a setup presents, determine an entry, and an exit point. Here we have the first presented gap, but since it is a sell-side imbalance, it has no interest to me as I'm only looking for longs to fill the gap above us. A possible setup occurs. Now, as you see, this is our first presented gap of interest. But here's what makes this setup risky. We have already moved quite considerably to the downside, and we are inside a big CB. However, we still have our opening range gap above us. Liquidity has just been taken, and the bodies of the candles are telling us the story of what's to come. See how it respects this previous level? So I'm reducing my risk because it's still a risky setup, and I'll be monitoring price. As you can tell, I was tagged. Now let's wait and see how price reacts here. Good closure of this candle, so I'll be moving my stop to break even, because if price comes back to our FPG, I don't want to be involved. Now that we are above this new week opening gap high, my stop will be moved to that NWOG low. Now, critical stage of our trade, which by the way is going great because we are in a 549 tick move, which relates to $5,490 with 2 full contracts. See how I highlighted this? This will most likely produce a pullback, because first presented gaps holds great strength throughout the session. And our stop profit was hit with 521 ticks of profit. Amazing. Now let's do the math. If you want to see another example, click on the link that will pop up in just a few seconds.